Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Welcome to another episode of the Ivanoff Retirement Insights podcast. My name is Casey, and I am here with my buddies, Paul Ivanoff, insurance agent with Ivanoff Advisors, and his son, Travis Ivanoff, investment advisor representative with Ivanoff Wealth Management. And they are here to break down some of the biggest retirement headlines from the week for us. We want to make sure you know about the offer Paul and Travis have on the table for you today. They've set aside 5 spots on the calendar for their complimentary Ivanoff Retirement Roadmap. 714-452-1955 is how you reach us. We are standing by at the office right now to take your call. And Travis, do you want to tell us a little bit about what this Ivanoff Retirement Roadmap entails?
Absolutely. So the Ivanoff Retirement Roadmap is what clients are really going after when they come to see us. And what this sheet does, it's 11 by 17. It's going to give you just that. It's a roadmap. It shows you every one of your accounts, whether it be your Roth, your IRA, your savings, your fund money, your growth money. It shows everything that's generating income for you, whether it be Social Security, pension, rental income. It has your estimated taxes on it, how much you're going to leave to the kids if you're leaving too much to the kids by chance. And it's going to show your target income. So it's a one-pager that kind of gives you an outline of every account and everything you have. So it's easy to track. Instead of going through like a 100-page report, it's all on one big page. And we have it digitally and as well as a hard copy that we include in our client strategies when they onboard with us.
Yeah, Casey, it all starts at the seminars where we actually show, as we're speaking, we have a tripod. We have the actual retirement roadmap right to the side of us. And in the end, by the time we're done, people realize when they make appointments that this is a must-have that they want that they don't have with their current advisors. So this comes up almost every time we meet with somebody.
Absolutely. And I just want to emphasize, too, there is no obligation attached to this offer. That is why it's such an amazing opportunity that we want you to take advantage of. It's just a conversation. It's a chance for you to sit down with Paul, Travis, and the team and get your big retirement questions answered. It's a fantastic opportunity. I want you to take advantage, but remember, spots are limited. So go ahead, give us a call. Let's get you on their calendar. That number for you, 714-452-1955. One more time, write it down. Keep it handy. 714-452-1955. Or if online is better for you, you can always head to ivanoffinsights.com. That's Ivanoff, Ivanoff, and you can get connected with us that way. All right, Paul, Travis, I want to pose a question as we get started for our listeners. If I asked you what is historically the worst month for the stock market, what would be your guess? Now, many might say October, which marked the start of the Great Depression and the Great Recession, but the answer is actually September. So my question for you guys is, when you're developing a risk strategy, does it need to take the yearly ebbs and flows of the market into consideration, or is that overthinking it? Talk to us about this.
Yeah, I think that would be overthinking it. If you're trying to time every month, the market may be up or down, September historically being they call it the September effect, which is, there's a seasonal trend where the market is down at times. That's not what your portfolio should be really aiming to accomplish is, we need to get in and out of the markets by September. What we need to do is make sure that your plan is all encompassing and we have, different buckets of money. So if the market is down in September, you don't need to panic, right? And that's what our clients have. We have these different quadrants or buckets we build out where you have your income quadrant, you have your growth quadrant, you have your balance quadrant. And if we do a good combination of all those, the sum of all those parts are more important than one part of your portfolio. So if you are worried about September and you have growth, you should be able to ride out that, September storm with no problems because we've done a good job of diversifying your buckets of money. So our clients aren't concerned about September. Of course, we all want the market to do well, but it's not going to make or break the strategies or retirement that we're building out for our clients.
Well, so here's something that I'm curious about. If somebody's approaching retirement, or maybe you're working with somebody who just tends to play it on the safe side, does it actually make sense for them to adjust their portfolio to brace themselves for months like September? Or is that just kind of letting those old market myths get in your head? What do you guys think about that?
Well, our clients are already prepared with the roadmap that we put out. It's all in there.
Yeah, and I would add, after you go through our retirement roadmap process, like currently, if you're sitting in a 401k or something that is just passively managed, no one's really paying attention, nor are you might have an issue with September. But specifically what we're doing at our firm, we are ready for September because the way we design our retirement planning is built for the good and bad times of the markets. So if you haven't done that, you should see us. If you're sitting in a 401k, again, passively managed, no one's really watching it for you. Or even if you have another advisor that's not really hands-on, then you should be concerned with September. But our clients should not be concerned because we're putting together an all-encompassing portfolio that can, handle the ups and downs of the market.
It's so important to remember that sticking to a plan is more important than chasing those headlines. A proactive, disciplined strategy is what's going to keep you on track, no matter what the calendar says. And that's exactly what Paul, Travis, and their team are here to help you with. So just remember, those first 5 callers today at 714-452-1955 will claim a spot on the calendar for that Ivanoff Retirement Roadmap. This is completely complimentary, no commitment. It's just a conversation, but spots will fill up. So go ahead, give us a call. That number again, 714-452-1955. One more time for you, 714-452-1955. Or you can visit us online. We are at ivanoffinsights.com. All right, so let's talk spending here for a moment. Fiona Gregg, she's the head of investor research at Vanguard, and they recently did a study on how people spend in the first 5 years of retirement. Fiona is calling it the do nothing or do all phase. Take a listen.
We basically saw 3 different behaviors. About half of people take withdrawals at some point over the 5 years. And a quarter of people didn't touch the money for the full 5 years. And a quarter of people took it all out in the first year.
So guys, we talk about having an income plan so that you know the money is there. But listening to Fiona, it got me thinking, do you also have to build a spending plan? Can you talk to us about this?
Yes, I think we should. A lot of our clients, I think Fiona is absolutely right. Half of the clients that we see, they do take some money over the 5-year period, and a quarter of them really don't touch it. One of the big concerns is it's the quarter of the people that we see, the clients, where they actually go into it, take it all within 5 years. We see this and we try to discourage them from that, but it's hard. We do have clients, good examples. We have clients where they retire and they have this money and they just, they think it's found money. And next thing we know, they're calling me and Travis saying, hey, we've just bought an RV for $120,000. And I know it wasn't in the plan. What do you guys think? Or what can we do? I know we got to get them not to do that. So we try to encourage them not to with our roadmap.
Travis, any thoughts here?
Yeah, as far as a income plan, that is going to include a spending plan. And usually what that starts out as, hey, what's your target number? How much do you want to spend a month? And sometimes they don't have an answer. So the easy way to back engineer that is we start figuring out what they're getting paid annually or what they were used to living off annually while they're working or, if they're currently working. And then we start building out a spending plan. And it takes a while for clients these days to be able to understand that, hey, we're not going to run out of money. We have a good income plan built here. So, to break old habits, a lot of our clients got to where they are because they're not used to spending money, right? They're savers and they're saving and they're working and they're loading up their 401ks and other investments. And now all of a sudden we're going to sit there and tell them, hey, it's time to live off these investments. And the number one fear usually that we hear is that, hey, I don't want to run out of money.
Right.
That's what I'm afraid of. So we build a spending plan, whether it be $10,000 a month or $20,000 a month. I had this happen last week. I had a client come in from one of our dinner seminars, said they listened to our podcast and radio show as well. And they said, look, we're not really spending a whole lot of money, but we don't know what our required minimal distributions are even going to be. And our current advisor hasn't discussed that. So I built out the roadmap for them. And we figured out that at age 75, they're going to have to start taking $300,000 a year from their required minimal distributions on their tax-deferred money. Well, at their age, I'm like, why are we going to kick the can down the road and load all this money in your retirement? We need to come up with a spending plan that you're comfortable with So we start spending the money now, enjoy it now, help your kids now. Let's not wait till 75 where you're pulling another 300 grand a year. So clients need a spending plan. They need to see it. And that's what our retirement roadmap does. It puts that plan. We hit a target number. We show what the dollars you're starting with versus the dollars you're ending with. And from there, you can feel more of a roadmap as to what you can spend. Now, getting clients to do it is another conversation because, again, they're used to saving their entire life. Mm-hmm. So getting that spending plan and then getting clients to actually do it, those are two different things. But at least we're showing clients like, look, let's not blow through it in 5 years. Let's not go buy an RV and a vacation home and then actually be one of those clients that does run out of money. Let's come up with a realistic spending plan based off realistic rate of returns, inflationary numbers, and get you spending and not wait till 75 like that other client is. And all of a sudden you have an influx of 300,000 at age 75 when, let's face it, you've probably slowed down a bit. You probably do not have the same energy. So we want to make sure we're front loading retirement, enjoy the go-go years, and we can take our foot off the gas pedal in the slow-go years where we're spending less. And then the no-go years, you're probably not spending that much money. My grandma maybe goes to Olive Garden once a quarter. That's her big.
That's her big night out.
That's her big night out. She's 94.
We have to force her to do it.
Good for her. Right? I hope she has a glass of wine with her pasta.
Yeah, and endless breadsticks and salad. This is not an Olive Garden plug, but that's what she does.
We are not sponsored by Olive Garden. Just need to clarify that. But I want to ask you guys, how do those conversations normally go in your office when a client comes in? They express to you, like most retirees, their number one fear is running out of money in their retirement. And then you sit down and look through it and you tell them they can actually spend way more than they thought. Does that happen more oftentimes than not? Are they surprised that they can actually spend the numbers that you're telling them they can?
A lot of people are totally shocked. First of all, they haven't thought about it before until they come into our office. And in the end, when we put our plans together for them, they're feeling pretty comfortable. And a lot of it, it's all dependent on their health condition and lifestyle. That's it. And we build around that.
But yeah, they are shocked. And I have clients that are making more in retirement than they did during their working years for a number of reasons. But they are shocked and they're thankful. They're like, hey, no one's ever really broke it down to us like this. We didn't know how much we can spend. We didn't know what our chances of running out of money were. We've never really thought about the way we're pulling money, because it's not just about what you're spending down. It's the order of which we're spending. Are we spending down the taxable money first or the non-qualified accounts first? Are we turning on our Social Security at 62? Or are we going to turn on at 70? So not only do they get a chance to see what they're able to spend, but then there's different tax efficient strategies we can use to make sure we're keeping taxes in mind when we're spending these dollars down. And most clients are not thinking of that. So we're putting in, not only are we getting the dollars they need to live a happy retirement, which they didn't know they could actually do and sustain, we're also doing it tax efficiently, which a lot of clients appreciate.
Yeah, you can actually go to Olive Garden once a month instead of just once a quarter. I mean, exactly. That's like Christmas morning for a retiree.
Yeah, you might be able to do even not even a lunch special. You could actually
That's right. You could pay full price at dinner, prime time, 7:00 reservation.
Yeah, every day is Saturday.
There you go. Every day is Saturday, and we're spending it at the Olive Garden. No, but in all seriousness, a solid spending plan is going to provide a retiree that confidence and the green light that they need to enjoy their money without that guilt or worry that can come along with it. And this is the kind of thing that Paul, Travis, and their team are helping clients with every single day in their office. So if you're ready to get that conversation started, they are here to help. Those first 5 callers at 714-452-1955 will receive a complimentary Ivanoff Retirement Roadmap. This is the perfect chance for you to start building that plan that every retiree needs put in place. We're standing by live at the office right now, ready to get you on the calendar. You've just got to make the first move. That number again, 714-452-1955. One more time for you, 714-452-1955. Or you can find us online anytime. We're at ivanoffinsights.com, and that's Ivanoff, Ivanoff. All right, guys. 7 tech stocks continue to dominate Wall Street, but when you set those aside, is there still room for the market to climb even higher? Here is Jeremy Siegel of the Wharton School of Business on CNBC recently. Take a listen.
Certainly, we could have a pullback. I still think the bull trends are intact. But once you take out the Mag 7, we're only, slightly above a longer term medium. So I'm still positive on the market at this time. Of course, any sort of developments could come that could change that. But what I see is still constructive, very constructive.
But guys, for those nearing retirement, is the bigger risk not missing out on growth or not being prepared when that bull market finally cools?
It would be the latter. Definitely not being prepared for when the market cools. In fact, a conversation I have in an office right now when clients are just addicted to the growth right now in the S&P 500 and, other indices, what we're talking to them about is, hey, maybe it's time to pull off our gains. Let's get a little greedy here. Instead of waiting for the market to continue to go up, let's take what we have out of the market and let's maybe use that for income purposes. Let's make that safer. So, as much as we want to enjoy the growth of it, it's paper gains and paper losses unless we capitalize on some of this growth. So I think that our clients specifically and those listening to the show, look, you've probably already made most of your wealth, right? If you're getting ready to retire or near retirement, hopefully you've done a good job of being a saver. But now let's get ready for this market to cool and let's capitalize on what you have made in the market instead of continuing to wait for it to fly up. Take some of the gains off the table. Let's put it into our protection bucket and make sure that we can actually live off those gains. If the S&P's up, 10, 11%, whatever it currently is, and you pull some of those gains, what we do is we fill the dream bucket. And what that means to our clients, and anyone that's listening that is a client knows what I'm talking about, is we've had clients go, you know what, Travis, I really want to take the kids to Hawaii this year. And you know what? I don't know if the market's going to continue to go up. What do you think I should do? Well, I encourage clients, let's take some gains off the table and let's fill the dream bucket. Let's redo the kitchen. Let's go to Hawaii. I had a client come in earlier today for a review. Portfolio is doing great. She's talking about setting up her bucket list trip next year to South Africa. Ooh. She's like, well, when do you think I should pull the gains? I'm like, well, look, the market's up, down, or sideways every single day. It's been doing really well. Why don't we take some of the gains off the table now, go into maybe a treasury bill or some kind of portfolio that's going to keep us safe and earmark that for the dream bucket, which for her is South Africa. So we had a conversation this morning about that. She's excited. She's going to actually utilize those gains instead of waiting for the market to cool and then go, oh man, shoulda, woulda, coulda.
Right.
I wish I would have pulled those gains off the table when the market was up. So, don't get too greedy. Don't wait for it to continue to go up. Let's access those gains. That's what our clients are really worried about, is capitalizing on those gains. Because if we made, 5, 10, 15%, whatever it is, pull the money out. Let's not wait for the market to crash. Let's actually use some of that and fill one of your dream buckets, right? Retirement's about memories and doing things on the bucket list. Those gains are going to help you do that. Let's not wait for the market to have a correction and then you think, oh, I shoulda, woulda, coulda.
Yeah, to add on to what Travis is saying, that a lot of our clients, especially when we first meet them at the seminars, they're on a roller coaster ride with their retirement, their 401ks. The market goes up and down. Usually they're thinking when it's down, geez, I wish I would have got out earlier, all that. But in the end, what investors, from what I heard from Warren Buffett saying, is what investors learn from their past mistakes is that they don't learn from their past mistakes. They keep doing the same things over and over and over again. And here we are at my age, at our seminars. Most of our clients are retirees and those soon to retire. If you want to live a good 30-year retirement, you don't want to go through that roller coaster ride. And that's why it's good to get with us and get an Ivanoff roadmap.
Absolutely. I mean, lately it feels like this bull just keeps charging forward. But if you think about it, as we all know, nothing lasts forever. So let me ask you guys this. If this bull run does eventually cool off, what could that mean for the retirement plans and the income strategies that you've set up for your clients?
Well, that's the beauty of what we do. We're not dependent just on market performance in order to live a good retirement. We're using fixed index annuities for income purposes that are going to continue to, cover that baseline of income. And that's what we do at our office. A lot of what we do is, you can call it pension planning, right? Between Social Securities, maybe pensions, rentals, and fixed index annuities that we use for income planning. Well, if we have enough baseline income, let's say that we're already hitting $100,000 a year of income between all those different paychecks that we're utilizing. whether the market's up, down, or sideways, that's not going to dictate whether or not you have a successful retirement, right? I don't believe personally the market was designed for retirement income. You can have some money in there to generate income, but if you're only counting on market performance to generate retirement income, to me, that sounds like a very stressful retirement. So with our clients and what we're building out on our Ivanoff Retirement Roadmap, whether the market's up, down, or sideways, you're still going to have a successful retirement with all the planning we're putting in behind the scenes. We really use the market as a bonus, right? Market does well. Well, again, like I said earlier in the show, let's fill that dream bucket. Let's do something that we've always thought, whether it's the bathroom, the kitchen, the grandkids, the college fund. That's really what we're using the market for. And I want to encourage my clients to have money invested in the market, but not let it, dictate what your retirement's going to look like. And then I also talk to clients about this. I don't know if you're familiar with FOMO, fear of missing out.
Of course.
Right? Yeah, we've all heard that
Who
these
isn't?
days. Well, we don't want our clients to have FOMO on the market returns either. So we want to make sure we're participating on it. But again, we don't want it to dictate whether or not we're going to have a good retirement or a bad retirement or a good year or a bad year because the market is upside down or sideways. It's not a great way, in my opinion, to have a successful retirement. We need multiple pieces to the puzzle and not just count on market ups and downs. And I don't want you to have FOMO. I want you to make money in the market when it allows, but let's not only count on that.
Yeah, and also to add to what Travis just said, as far as the buckets, the dream bucket, part of it that we talk about quite a bit is that we like to have our clients make memories. Most of them, they feel that at some point they're going to pass away. The kids are going to get whatever, the inheritance. And of course, the parents won't be there to see it. And in the end, they don't really know how to spend it for the most part. But we encourage our clients, just make memories, which, I've spoken about it before. I've taken people to Legoland, our entire family and others. And, those kids and grandkids, they still talk about that to me when we meet. And that was like 2 years ago. So make memories. Why not?
So if you like the idea of having a well-rounded retirement plan, income plan, a structured spending plan, that's everything we do every day in our office. We build out a retirement roadmap that allows you to spend money, also make money in the markets, whether it's up and down. So we do this. It's complimentary. We bring in clients all the time from our dinner seminars, our radio shows, our podcasts, and we just show them their path to retirement. We give them the roadmap, right? That's what you need whenever you have a destination, is some kind of roadmap. So if you'd like to sit down with us in our office, get to know us, and if you like the idea of not letting the market dictate your retirement, then you should give us a call at 714-452-1955. Again, that's 714-452-1955. Let us give you a roadmap to retirement so you can enjoy more time living and doing the things you always wanted to, rather than just worrying about market ups and downs.
Yes, do not miss out on this opportunity. Travis, Paul, the whole team, they are making it easy for you today. You've just got to pick up the phone and dial 714-452-1955 is that number for you again. Give the office a call. Let's find you the next convenient time on the calendar. One more time, that number 714-452-1955, or visit us online. We are at ivanoffinsights.com. That's going to do it for us on this episode of the Ivanoff Retirement Insights podcast. We'll be back next week with more great insight from Paul and Travis Ivanoff of Ivanoff Advisors and Ivanoff Wealth Management. We'll see you soon.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.
All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decisions, nor is it intended to be a projection of current or future performance or indication or future results.